Good morning, everyone, and happy Thursday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. As usual, this morning we'll be taking a look at exciting stock market news, notable earnings reports, and which stocks are the morning's biggest gainers and losers. Don't forget that TipRanks Premium is now available on a monthly payment plan, so if you've been thinking of unlocking some fantastic research tools, now is a great time to do so. Now let's get right into this morning's exciting stock market news. U.S. stock futures are in the red this morning following the Federal Reserve raising interest rates by 75 basis points yesterday. Right now, Dow futures are down 0.15%, S&P 500 futures down 0.24%, and NASDAQ futures down 0.48%. Shares of Meta Platforms are down slightly after the company reported that they'd be planning to trim costs by at least 10% over the next few months. Meta will be restructuring departments and asking employees to apply for other roles within the company. Workers who don't find another role within a certain time period will be subject to termination. The tech giant is also implementing other moves to save money, including cuts to overhead and consulting budgets. On an earnings call last month, Zuckerberg said that the plan is to steadily reduce headcount growth over the next year. Analysts currently rate the Meta stock a moderate buy with an average upside of 57%. Target is jumping right into the holiday season earlier than ever and kicking it off with a big hiring spree. The company is seeking to hire 100,000 seasonal workers. That would be more than twice the number of employees sought by Walmart, and in big contrast to many companies who are slowing down their hiring. This early holiday promotional period was anticipated by many, as Target currently has elevated inventory levels. Analysts currently rate the Target stock a moderate buy with an average upside of 20.5%. Pharmaceutical giant Eli Lilly says that the FDA has given them the green light on their oral lung cancer medication Retevmo. This comes under the agency's accelerated approval for certain adult patients with solid tumors with a specific genetic makeup. The company is required to show the clinical benefit of Retevmo to receive continued approval for this indication. The treatment is indicated for those whose cancer has advanced despite prior systematic therapy or who have no satisfactory alternative treatment options. Analysts currently rate the Eli Lilly stock a unanimous strong buy with an average upside of 24%. And shares of Salesforce have rose slightly after the company provided upbeat medium-term outlook for their revenue and margins. The customer relationship management tech provider expects its top line to reach $50 billion by 2026, implying a compound annual growth rate of 17%. They're also expecting a 270 basis point improvement in their 2-year adjusted operating margin. The company also expects their total addressable market to grow at a compound annual growth rate of 13%, reaching $290 billion by 2026. Analysts currently rate the stock a strong buy with an average upside of 52%. Now moving over to notable earnings reports. In the after hours today, we'll be hearing from Costco and officially hearing from FedEx. Of course, they released preliminary earnings last week that caused the stock to drop 22% when they missed expectations. So it's unlikely we'll see big surprises today. Already in the pre-market this morning, we did hear from Accenture. Their earnings per share just beat analyst expectations. For their Q4, they reported earnings per share of $2.60, 3 cents ahead of analyst expectations. Their revenue of $15.4 billion was up nearly 15% year over year and was in line with analyst expectations. Accenture also hiked their dividend by over 15% and approved $3 billion in additional share repurchase authority. Analysts currently rate the Accenture stock a moderate buy with an average upside of 26%. We also heard from Darden Restaurants, the parent company behind popular restaurant chains like Olive Garden, Red Lobster, and Longhorn Steakhouse. Their earnings were in line with expectations, but revenue did fall short. Darden Restaurants released Q1 earnings of $1.56. Their revenue of $2.45 billion was up over 6% year over year, but did miss analysts' expectations by just $20 million. Darden did reaffirm their 2023 outlook as well. Analysts are rating the stock a moderate buy with an average upside of nearly 8%. And coming out with mixed results this morning was FactSet Research. They reported Q4 earnings of $3.13, which was shy of analyst estimates by 8 cents. Revenue of $499.3 million grew over 21% year over year and beat analyst estimates by over $11 million. For their fiscal 2023 earnings per share, they're guiding above the midpoint consensus. Analysts currently rate the stock a moderate buy with a slight upside of 1.5%, but we'll see what reiterated price targets come in today following the report. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Virtue Financial on the news that the SEC is likely to keep payment for order flow deals. Under the ticker VIRT, the stock is up 8.4%. They're followed by Robinhood, who's rising on the same news, under the ticker HOOD, up 6.55%, and IronSource, under the ticker IS, up 6.4%. Our biggest losers this morning are led by Novavax. Their stock is sliding after Biden's comments that the pandemic is over. Under the ticker NVAX, the stock is down 6.4%. They're followed by Apollo Medical Holdings under AMEH, down 4.2%, and Grifols SA under GRFS, down 3.45%. So that is going to be everything for Thursday's pre-market morning update, bringing you up to speed with what you need to know before that opening bell. We have almost made it to Friday, guys. Make sure you say good morning in the comments down below. I always love hearing from you. Have a great Thursday, and I'll see you back here next time.